Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day, Wednesday, January 11th, and just got one economic news release scheduled for today, and that is the Beige Book that will be coming out at 11 o'clock Pacific Coast time this morning. So basically, it'll give us an idea as to what the Fed was kind of speaking what their thoughts were during the last meeting in December. So it should give us some kind of gauge as to what their thoughts were. That could be a market mover, of course, because it's everybody looks at what the Fed's doing and what their thoughts are. Give us some insight as to where they think things are moving since they have all the numbers. So that could be you could see some difference in the market after 11 o'clock Pacific Coast time today. So we'll jump over to the headline news here. And again, not a whole lot today. I'm going to keep it short and sweet, but the stock market's a little mixed today. I think it was S&P was the only one up, NASDAQ and Dow were down. So again, they're kind of looking at right now it's investors. So one of the good news was the home builders, I guess. Lennar showed some positive results in that they had a decline in, I think, number of sales, but they had profits and such. So that was kind of good news. So they kind of, as the industry, they kind of gave them a little better marks for the day so far. And then also, Germany's GDP came out was up closed up at 3%. So they started off the first half of the year really high, about 3.7. It did decline the second half later in the year, which they finalized at 3%. So they were the largest economy, obviously, in Europe, and that's going to be important to note. Merkel has been kind of quoted that they may be putting additional funds into the European emergency fund, so that might be something to help ease investors' fears about what's going on in Europe so far. Again, that's the headlines where everybody's kind of looking towards. Nothing's kind of blown up, nothing jumped out. That's why we haven't had any swift changes as of yet. So let's go ahead now with all this information. Let's go ahead and see where interest rates are moving with the bond market. As we can see, basically we had a big pull off yesterday, which you see that long, we touched the ceiling and pulled way back and closed the day up 3 basis points. Now, today we're basically the same spot as where we left off yesterday. We start off where we left off yesterday, and then we're up another 3 basis points. Now, the reason why you see this down by towards the 10-day moving average is because what they have is called a bond rollover. Essentially, what a bond rollover means is that there's no change in pricing. It's just that they're closing out the coupons for last month for those months worth of loans when they package them up on Wall Street and they're starting anew. So this will be the new pricing beginning for the next round of loans are the package for Wall Street. So there's no bearing on price as it was about 30 basis point drop, but which would bring us right back to where we left off yesterday. So we're right in line where we should be, and so we should be okay with that. So interest rates are basically the same as what they were yesterday, and there was no change in interest rates. You guys have a wonderful day, and I'll catch you guys tomorrow. If you guys are on my site, please subscribe, get your free updates. Have a good day.